What is up, guys? My name is Bryce Pruitt. This is the M1 Journey, and welcome to the channel. Hey guys, and welcome back to episode 26 of the M1 Journey. If you are a new viewer, welcome to the channel. If you are a return viewer, welcome back. Not a whole lot to report on this week as far as any market news. It was still relatively smooth. We generally had an upward trend, mostly green. Today, being Monday, was a little bit more volatile, pretty flat trading overall, but nothing to be alarmed about. I know if you're in the semiconductor space, if you're invested in like Intel and AMD, you kind of got some bad news with NVIDIA. If you're a NVIDIA shareholder, then you're probably pretty excited, but that's really the only major news that came out today. Other than that, guys, of course, for the channel, like and subscribe if you haven't yet done so, as well as go check out my latest Let's Discuss video where I talked about Visa and I shared my thoughts about that. And then also check out my social media pages. I have links to all of those down in the description. So for this video, it's pretty much just going to be the same old formula where I'll give you my portfolio updates to M1 Finance, but I'm going to wrap up today by discussing the top 3 stocks that pay me the most in passive dividend income each year. Just kind of show you the totals, what the yield of those individual stocks are, and just give some brief thoughts about each one of them. So before we get into it, of course, guys, I am not a financial advisor. I'm just 21 years old. I do this strictly for your entertainment purposes. So please do your own due diligence, or please consult a financial advisor before making any investment decisions. So with that being said, let's get into the portfolios. Alright guys, so here we are back in the long-term portfolio on M1 Finance for the week. As you can see right away, relatively flat, but we still did trend upward. We're up about $185 over the last 7 days, 35 of which came from dividends that we earned. Verizon and AT&T both had their ex-dividend dates pass, so that's really what you're seeing here. So we'll get that later in the month. For the day, though, we were down just barely. I mean, it's pretty much breaking even at this, percent change. Then month, we're up about 4% time-weighted return, and then up almost 1,000. For the quarter, we're up about $2,048, with a time-weighted return of 9.14%. And then all time since we joined M1 Finance, we are up almost 36%, and then about $5,600, which $480 in earned dividends. So things are still moving well in this portfolio, generally having up days overall, as you can see here on the 1-month chart. For the week, though, winners and losers, we did have a couple of winners, one of which was Lowe's in the consumer discretionary, which was up almost 3.6%. Lowe's had a good week. And then the other winner is in my industrials pie, and that was FedEx. So FedEx was up about 3.3%. This is the first time FedEx has been featured on winners and losers since I bought it. So it is good to see that it's continuing to climb even after I bought it. Our lone loser of the week was in information technology, and it was Advanced Micro Devices. AMD mostly suffered these losses today due to the news that NVIDIA was expanding into the field that they share with Intel. So kind of sent their shares tumbling, since NVIDIA obviously is a huge competitor of theirs, and AMD is still trying to get a real strong foothold in the space. So there was a little bit of concern there for investors, but personally I'm not too alarmed. That is why I did buy a little bit more AMD today, as I'll show here. So bought $50 more of AMD with it down about 5%, and then I also bought some more Target because it was down. But other activity throughout the week, I did make an extra deposit where I bought FedEx, AT&T, and Verizon. My reasoning for buying Verizon and AT&T was because of that ex-dividend date coming up and passing. So I want to make sure I got a little bit extra just to really max out that dividend when it is paid out. So this here was actually my bi-weekly deposit. As you can see, I still didn't invest $50 of it. I just really didn't know what to throw it into, so I'm just going to leave it as a cash balance until I see a good buying opportunity for one of these stocks to maybe, take a little bit of a tumble like AMD did today. So I'm going to have kind of a wait and see approach there. Move on to the Roth IRA. The Roth is still up about 20% time weighted return, which is about $350. For the quarter, though, I'm having a really strong quarter, up about 7.8% and $203. For the month, up about 4% and a gain of about $126. And then for the week, again, still pretty flat, but still trending upward, up about $22. And today we got as close to breaking even as you could possibly get. We're up just 14 cents. So as far as activity here, nothing really doing. Just had this one dividend paid out, which is actually the only dividend we received this week. So is my bond market ETF. So really nothing going on with the Roth IRA. Of course, I'm still looking to add Visa and Home Depot when I get the chance. I just waiting it out a little bit to kind of see how those stocks kind of continue over the next couple of weeks. For the aggressive portfolio, still pretty up and down. We are still ahead on this portfolio overall, up $21. For the quarter, we are down about 1%. For the month, it's been kind of a rocky month, down almost 3%. For the week, though, we did trend generally upwards. We did have a down day today, mostly due to, Workhorse, DraftKings, and Lemonade, as well as Carnival. These really drug this smaller portfolio down, which brought it down on the day. So that's pretty much all the news in these portfolios. Not a lot going on. When the market kind of settles into some stability, it doesn't make these portfolio updates as exciting because I'm not going to be buying and selling as much whenever we're not really having any major news in the market that either sends stocks up or down. But, stability is a good thing, so I'm not complaining. So that's why I'm going to use the rest of this portfolio update to talk about my top 3 dividend paying stocks that pay me the most each year. So I'm going to flip over to my Google Sheets where we can kind of look at this further. So my third highest paying stock is actually Realty Income. Find it here. It is ticker symbol O. I have almost 21 shares at an average cost of $56.74. So over here we can see how much it pays me is $58.90. So I'll flip over to Seeking Alpha a little bit more about Realty Income. They currently trade for $65.67. And down here they have a dividend yield of 4.33%, an annual payout of $2.82 per share per year. Their payout ratio is a little bit high, but they are a REIT, so that is not as much concern on payout ratio as, say, some other companies. Their growth rate is pretty small. That's, pretty small overall when some companies are growing their dividend by 10 to 15% each year. And they have been growing this dividend steadily for 24 consecutive years. So, of course, Realty Income is pretty well known as the monthly paying dividend stock. So you will get a dividend each year just for owning Realty Income. So we'll go back to the second stock that pays me the most each year, and that is IBM. So IBM is here. I currently own 9.2 shares of IBM at an average cost of $119.78. So if I flip over here, you can see IBM currently pays me an annual dividend of $60.06. Again, flip over to Seeking Alpha to talk a little bit more about IBM and their dividend. They have a dividend yield of 4.8%, which is higher than Realty Income's that we just talked about. Due to the higher share price, they do pay more per share per year. They pay about $6.52, which is pretty high. That's not a common sight you see for such large companies to pay out this much per share, but IBM is one of the few that does. They have a payout ratio of about 60%, which is better than I would have expected. I know IBM kind of gets a bad rap as being a, value trap to some degree. I'm not as down on IBM as a lot of other people you may watch on YouTube or investors you listen to, but I still remain pretty optimistic on IBM's long-term prospects. But as far as their dividend, they have been growing it at about 4.6%, which again is a pretty low growth rate, especially considered against some of their competitors like Apple and Microsoft. But still, getting a pay raise of almost 5% each year is pretty good. And they have been growing it for 21 consecutive years, which is good to see, of course. So first on the list, the company that pays me the most in dividends each year is AT&T. AT&T, of course, is pretty famous for having a rather large dividend yield recent years, since their company has not been growing, or at least has had stagnated growth. So I currently own about 41.4 shares of AT&T. So each year they are projected to pay me out $86.19. Go over here again to Seeking Alpha. So if I go here and check it out, they have a dividend yield of about 6.9%. They pay out $2.08 per share per year. Payout ratio of 66%, which is a little bit on the high side, but still is fairly manageable. The only thing that may combine with that could be concerning is their large debt load, but they have been working on that in recent years, which is a good sign. They've been barely growing the dividend for the last 5 years, so that's not a great sign, but still, anything you can get is good. But I'm glad to see that they've been putting a lot of money back into the business to kind of cut down on some of their debt burden. As well as, of course, they've been growing it for 23 consecutive years, which is good to see that they've continued to pay the dividend through good and bad economic and business conditions. So that's pretty much it. A couple of thoughts about these three companies. They are probably not the flashiest pick, but if you are an older person that's closer to retirement, these could be some good picks for you to kind of generate some income that you can bring home, pretty dependable, either each month in the case of Realty Income, or every quarter, which is what AT&T and IBM pay out. If you're a younger investor, these are probably not companies you're looking at too heavily, other than just for the dividend. But there are plenty of other alternatives out there. The next highest paying actually I have is Verizon. Verizon, of course, is another telecommunication stock. So again, guys, that's going to pretty well wrap things up. So I'm going to head into my final comments. So guys, that is going to pretty well wrap things up for this video. If you would like to sign up on M1 Finance, feel free to do so using my link down in the description. So check that out for more details, because if you use my link, you will get $10 from M1 just for signing up. So again, check that out. And if you would like to support the channel, guys, go ahead and subscribe, as well as drop a like and comment on this video if you did enjoy it. So just a good way to kind of spread the word about the channel and help me out. Again, guys, thanks for tuning in, and I hope to see you on Thursday.